What if progress isn't as solid as we think? What if every boom hides a weakness we almost never see? And what if the rise of AI carries the same shadow? And why? Imagine this. A force that moves under every age of prosperity, unnoticed until it cracks. A force older than technology, older than markets, older than capitalism itself. Today we call it innovation. 400 years ago, they called it other names, but the hidden engine was always the same. Let's reveal it. I'm Alex, and I'll be your historian for this journey. Artificial intelligence arrived like a modern comet, bright, sudden, undeniable. In 2023, machines began writing, speaking, analyzing, imagining. For the first time, we felt technology stepping into territory once reserved for humans alone. It was breathtaking. New medicine, new education, new creativity. A sense that everything might change at once. Businesses reorganized. Governments scrambled. People whispered that a golden age might be starting. But quietly, another question emerged. Where is the money? AI could transform society, yes. But transformative technologies usually become commodities, necessary to survive, but not engines of massive profit. Electricity did it, railways did it, the internet did it. Once everyone shares the same tool, the advantage fades. So what happens when a technology capable of reshaping civilization struggles to reshape business margins? Some say the value is coming, others say the costs may outrun the gains. Both may be right. And here's the truth. This tension between promise and profit isn't new. Humanity has faced it before, across centuries, across empires. Each time, expectations outran reality. Each time, the dream pulled money into strange places. Each time, a hidden engine began to turn beneath the surface. To understand AI, we must return to where that engine first appeared. Tulip mania is often told like a joke. A strange moment when people supposedly lost their minds over flowers. But the truth is richer, sharper, and surprisingly modern. In 1637, at the height of the Dutch tulip craze, one rare bulb sold for more than a skilled craftsman earned in 10 years. But people weren't really buying flowers. They were trading contracts, promises and futures, little slips of paper tied to hopes for tomorrow. Value came not from petals, but from expectations. Imagine that. A market floating on belief rather than substance. A system soaring on tomorrow's dream, not today's truth. And when one buyer failed to pay, the illusion cracked. A missed promise here, a broken contract there. And the entire structure collapsed in days. Not because tulips changed, but because trust did. Here lies the first lesson for AI. Every revolution begins with expectations long before it delivers value. And expectations become dangerous only when someone finances them, which takes us to London. A century after tulips, in 1720, Britain perfected the art of grand illusions. The South Sea Company promised unimaginable wealth from global trade. Investors lined up outside coffee houses to buy shares in a company that owned almost no ships. But behind the glitter, a stranger truth hid. Government debt, heavy, dull, real, was being repackaged as opportunity. People believed they were buying the future. In reality, they were buying obligations disguised as dreams. Booms built on expectations are fragile. Booms built on expectations funded by debt are explosive. And here's the link to AI. The modern AI race runs on massive borrowing. Corporate debt for data centers, cloud credits for startups, venture capital chasing uncertain returns, and infrastructure built on hope. Like the South Sea era, ambition expands with credit. And when ambition outruns reality, we don't get prosperity, we get overbuild. Which brings us to the age of steel and tracks. The 1840s delivered the first true technological revolution. Railways promised a new world, speed, mobility, commerce on a scale never seen before. Britain believed it was laying the blueprint of modernity, and for a moment, it was. But newspapers soon printed maps of hundreds of planned rail lines, many never surveyed, many impossible to build. Money rushed into companies that existed only on paper. Speculation outpaced engineering. Booms built on dreams funded by debt become risky. Booms built on dreams rushed into infrastructure become unsustainable. When interest rates rose, the entire system cracked. Hundreds of projects were abandoned mid-construction, silent reminders of ambition outpacing ability. And the echo today is unmistakable. The global GPU race mirrors Victorian steel. Everyone builds, few calculate. Everyone expands, few question. And when too much money chases too many promises, another ancient force awakens: leverage. The 1920s believed the future had no limits. Radio, cars, consumer credit, a world accelerating into modernity. Investors felt unstoppable. But beneath the glittery optimism, margin debt exploded. Ordinary people bought stocks with money they didn't have. Brokers loaned to anyone willing to dream. Credit lifted the entire market, higher than fundamentals could ever justify. Leverage is silent until the day it isn't. And when liquidity tightened in 1929, the collapse came like a thunderclap. Not because the technologies were false, but because the financing beneath them was fragile. Today's AI market carries similar shadows. Corporate borrowing for GPUs, private leverage in tech funds, option chains tied to a few enormous companies. The technology is real. The scaffolding beneath it is uncertain. But even when a technology is real, and finance is stretched, there is still one final ingredient that shapes its fate: timing. "1999 felt like destiny. The internet was arriving, the world was changing. Anything seemed possible, and investors acted as if the future had already happened. At the height of the frenzy, companies with no revenue and no product were valued at billions. Startups rented entire floors of office towers before earning a single dollar. Hope drowned out mathematics. But here's the twist, and it matters for AI. The tech wasn't wrong, the timing was. The internet did change everything, just not in 1999. The dream was real, but the profits were not. When the bubble burst, trillions evaporated in months. A reminder that technology can be transformative, without being immediately profitable. And here we return to today, armed with 4 centuries of warnings. AI is extraordinary, unlike anything before it. But the economic engine beneath it follows an old rhythm. From Tulips, we learn that expectations rise before value appears. From South Sea, we learn debt disguises weakness as opportunity. From railways, we learn infrastructure booms ignite overbuild. From 1929, we learn leverage cracks long before anyone sees it. From .com, we learn that revolutions arrive before profits. AI carries pieces of each. A dream bigger than technology. A race faster than business models. A promise larger than documented returns. It isn't doomed, far from it. But its foundations are shaped by the same forces that shaped every boom before it. And those foundations matter more than the dream they carry. So what do we learn from 4 centuries of booms? Not that progress is a lie, not that innovation is dangerous, but that prosperity rests on structures we rarely examine. Expectations, debt, infrastructure, leverage, timing, trust. AI may change our world. It may transform science, medicine, culture, and daily life, but its economic story will follow the same ancient rhythm. The dream is new, the engine beneath it is not. History isn't shouting, it's whispering. Stay curious.